morning, everyone. This is Ryan Ender with your Wednesday, February 12th morning commentary. Let's take a quick look back at yesterday's report and go over just a couple of the numbers. Starting here with corn, we see that USDA raised ethanol by 50 million bushels. They cut exports by 50 million bushels. That is fitting. We've been seeing the exports run behind the USDA pace to this point. At the same time, we've been seeing ethanol run ahead of the USDA's pace at this point. So these numbers are quite understandable from the USDA, resulting in no change in carryout. Flipping over to the beans, USDA did raise exports via 50 million bushels, likely anticipating some China buying. As we know in beans, we've seen trade not react to hardly any China buying talk or rumors. So even seeing the USDA raise exports by 50 million bushels, trade did not react. I think it's clear to say that trade is taking a we'll believe it when we see it approach. So that did lower carryout down to 425. Just from a strict fundamental stance, 425 suggests a March price of 954. So to show just how oversold this market is right now, or disbelieving China, that's where we look at things at 954 given that carryout. Flipping over to cattle. Once again, looking at what we've already seen from funds, selling 43,000 contracts, drives the June cattle down to 109.12 and a half. Funds still have a number of contracts to liquidate, roughly about 45,000 more. That could drive this market even farther. Using previous years, maybe projects the June to get to 102. Once funds finish selling, we can see it bouncing back to its fair value, which is right around 112. Cattle fundamentals for the week, we're looking at a show list as plus 20,500. We already have a 120 cash trade in Kansas yesterday. That's $1 lower early in the week. We could see that hint to another dollar lower later in the week. So we'll see how bids and offers change. But a 120 cash trade so far. We'll just be on the watch out for a potential 119 cash trade later this week.